And let's talk about markets. Sandeep, the small cap index is down 11% in the month of Jan. The average portfolios are down 12, 13, 14, 15%. But Nifty is down only 2%. Big dichotomy.
So I think this had to happen at some stage because in previous downturns, if you see any over the last 2 years, every time Nifty used to correct, the mid and small cap used to hold on. So that built in a conviction among most of the investors that they are more resilient. But actually, factually, it's not true. Like in any corrective move, small and mid caps would normally correct more. And then, due to corrective move in a lot of F&O stocks, and then margin calls and margin buying usually happens in small and mid caps. So I think last week, beginning of last week, it was very clear that one of the days, I don't remember which, the kind of selling which happened reflected that it could be potentially the crescendo of the margin led selling. I think that phenomena is done. Now, many stocks are responding to results. So, wherever there are good results, stocks are reacting positively. Bad results are also being, uh, I think, punished quite hard. So, I think that's the nature of the market because conviction is somewhat lacking at this stage.
San- Sandeep, one company which you've tracked and I think we've discussed in the past is L&T, and good numbers. Sandeep. Now I just think about the economy, which is economy is sluggish, government is not spending, but L&T's order book is strong. So they are completely going against the big trend.
Yeah, I think order booking was very surprising. The kind of order book increase they reported, I think it was far beyond what I expected and what most analysts would have expected given the news flow around slowdown. In fact, their execution is also so strong. Most of the other companies have seen some slackening on the infra capital goods side, but not L&T. So I think they are standing out. Their strategy of taking overseas orders from the Gulf, Middle East countries, that's working very well for them. And domestically also, they're able to take some of the bigger orders. And they're also participating on the defense side. So there was a little disappointment on the submarine orders where they had a tie-up where they did not qualify. But other than that, I think they are pretty well positioned there also eventually to get orders over the next few years. Margins were somewhat below expectations. So I think it's tough to say how the stock will react to uh, a potential of stronger growth versus lower than expected margins. So my guess is that stock could be stable near term, but longer term prospects still look good.
But Sandeep, around 3,400, and we were just chatting about it, the stock hasn't fallen, it's not gone up, it's been in this, consolidation band for a while now. Would you subscribe to add to positions, existing ones?
I would think so. I think the stock is pretty well positioned now. Post results, my guess is the reaction could be plus minus 2%. I don't know how people are reading it. My read is actually positive on whatever they have reported, and valuations vis-a-vis the rest of the large cap space is reasonable. Like it's not excessive. So I think there's no case for the stock to run up sharply unless the market runs up sharply or fall. So whoever wants to accumulate, they can do it at their own pace, is what I think post results.
Sandeep, what about the FMCG pack? Well, Tata Consumer, of course, is a little bit of a disappointment, even though the numbers are largely in line and the international business margin is expanded. But I think, it's the T factor which is not working well for them. And then the surprise from Dabur yesterday, which delivered pretty decent numbers.
Yes, I think the consumer numbers have been all over the place in the sense that many companies around 8, 9 months back indicated a potential recovery which did not take place. The stocks ran up and then they corrected again. Now, again, from most of the commentaries, what we are seeing is that companies are seeming to indicate that the worst is over and things will improve. And Dabur actually was quite categorically on that in their post-result commentary, and the stocks off significantly off its highs, which was hit just 3-4 months back. I think where the stock went above 650 levels. So my guess is that stock should react positively to whatever the management commentary is, and depending on how the results flow over the next few quarters, it could do better.
So Sandeep, while we can say that the importance of budget every year is going down, and there is logic and there is data to believe in it, but this time it's different. And when I say this time is different, the sheer positioning of the equity market is so light that little bit of good news could be amplified into great news. Are we in for this budget kick? It's a Saturday. I don't know what would be the play with institutional investors, whether they would be working or not. But it's a Saturday, it's a budget, market positioning is light, little bit of good news. Can that really, aid to some bout of short covering, Sandeep?
As long as the budget doesn't kick you, I think markets are very well positioned. I think even if there's no negative news, it will be positive news. That's how I'll see this budget, because the expectations are very low, and the historical precedent suggests that the uh, government is loath to give any kind of tax concessions or fiscal stimulus, irrespective of the situation of the economy. So let's see if their thinking process is different now.
Naresh,
Sandeep, other than FMCG, more money in the hands of consumers, could it have a cascading impact on some of the other consumer names?
I think consumer durables tend to be the biggest beneficiary of any fiscal incentive which comes in the form, especially of tax cuts. Because FMCG, the FMCG demand doesn't fluctuate so much on a daily basis just because your tax is low or tax is high or you have more money in your hands. But for the durable side, for any brown good, white good, motorcycle, car, etc., anything you want to buy, it immediately creates a positive reinforcement, or that cash flow makes you take that decision. So I think if there is something out there, I'm not saying there's going to be, but if there is, then I think consumer durables benefit more than FMCG.
And any plays over there that are looking good?
I think most of the stocks have corrected out there. So among the larger stocks, you have companies like Havels, V-Guard, Voltas, Blue Star. So I think a few that are coming to mind. So there'll be many more immediately. I'm not recollecting the names.
But Sandeep, good to be speaking with you. Thank you so much for your time today. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.